Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, it's a bit cooler this week. Certainly when we were recording the show last week, it was hot, wasn't it? It was the beginning of the heat wave, the latest heat wave, but it's certainly cooled down a bit.
It has cooled down a bit, yeah. I mean, we were talking to about my car, because people do take the mick out of the car I drive, and we've talked about it a few times. But I did discover this week that I think I need an aircon regas. It's not a good time to find out that you need an aircon regas when you've got a 3-hour journey in 20-odd degrees heat. But yeah, the aircon button wasn't really doing anything at all. It was really just recirculating warm air. So I think I might need an aircon regas.
So you were up and down the motorway with all the windows down.
I did, yeah. Yes.
The wind in your hair.
I did exactly that. Yes. As somebody was
flies.
as somebody was telling me how great their BYD Seal was with air-conditioned seats.
Yes. Oh, yeah. Air-conditioned seats, and you can get air-conditioned steering wheels as well.
Yes. Yeah. So they were telling me how wonderful it was in this warm weather to have air-conditioned seats.
Yeah.
At a time where I was thinking, I need to get my aircon regassed on. Anyway,
time for a trade-in, I think, Phil.
I think it is getting to that point. Yes, the comments and discussions around the choice of vehicle I have are increasing. So yes, maybe I need to do something. But anyway, we're getting to the end of this week. So good morning, everybody. On a probably nice Saturday morning. But we've got a few good headlines this week, haven't we? It's been an interesting week in the headlines, but we will get onto that shortly, won't we?
We will indeed, yeah. Lots going on this week, and probably worth just giving a shout out to the VRA AGM, because that's primarily why you were on the motorway this week.
Yes.
How did it go?
Very well. I mean, it's always a great event. It's something, obviously, in terms of the AGM, it's something we have to do. So we no disrespect to policies and procedures, but we do try and get through the AGM element fairly quickly, because it get onto the topics of discussion. But no, it was a great event. I mean, Oliver Philpott, who you'll know from Generational, that we had on as a supplier special, he did an update on AI, and because they use a lot of AI in his team, and do check out his social feeds from this week on LinkedIn, because I did feel a little bit sorry for him yesterday, because he left home fairly early on Thursday morning, with his wife being ill and his young child being sick, and a long day ahead of him. But I think he was feeling it by the time he got there, because it was fairly busy around Birmingham where the event was. But also we had a panel discussion with, again, friends of the podcast, Mike Allen from Cambria Private Capital, and Mike Jones from Fresh Track Holdings, who you remember from ASE. Yeah. And they followed an update from Omar Mirza and Kevin Lamb from Alvarez and Marcel, who are a restructuring business, and their presentation, Omar presented it and Kevin sat on the panel session, but very good high-level look at the auto sector and some of the things that are impacting it around the interest rates and gearing and restructuring of the dealers. So that was a good session to have. And I got to see Jeremy Yeh and Chris Plum in person from CAP HPI. So obviously our recent catch up with Jeremy on his monthly movements, but it was great to see him in person.
Yeah, it sounds like it was a really good event, and all went well. So
it did, yeah. And we launched the Auto Summit as well. So it's, as you'll know, Curtis, it's a free event held on the 19th of November down at Warwick University. Normally get anywhere around 200 attendees, and that is now open and live for registering. So check out probably mine and the VRA's social feeds for details on that. But great lineup of speakers already starting to build and panel discussions on that one.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week, and I think we probably need to strap ourselves in for this because we've got headlines from Motor Trade News, Just Auto, Autocar, Car Dealer, Motoring Research, Reuters, and the Daily Express. So a few stories to cover there from some pretty diverse sources, starting with dealers' used car stocks climbed as prices dipped in what turned out to be a competitive June market. May's UK vehicle production hits the lowest point for the month since 1949 as Lotus denies plans to close its Hethel plant in Norfolk. Arnold Clark's full year results came out and they actually soared to over £5 billion in 2024. But bosses there are warning that 2025 tax increases will cost the business an additional £30 million this year. A new global survey by Shell finds growing resistance among buyers to switch to EVs. And we'll finish this week's pod with news of not one, but two new Chinese brands due to launch in the UK by the end of this year.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
And companies recently featured on our supplier specials include Ivendi, the motor finance tech provider, ETT, who are shaking up AI dealer call handling, Generational, who you mentioned earlier, Phil, the EV battery health test provider, and MTC, who are disrupting the way dealer websites are designed and built. So if you'd like us to profile your business, then just get in touch with Philip or myself. We're both on LinkedIn.
So, I mean, yeah, great lineup as headlines as Curtis has run through there. So, as he said, grab your tea, coffee, fresh juice, or beer or wine, depending what time you're listening to the podcast. But we're going to head over to Motor Trade News, and this is that used car stock climbs as prices dip in competitive June market, and this is that used car inventories rose 6% year on year in June, but average prices slipped to the lowest level of 2025 as dealers fought for consumer attention. Now, this is obviously from the latest Motors Market View analysis report. So some fascinating insight, as always, in this one, isn't it, Curtis?
Yeah, definitely. And as ever, I worked with the team on this, so I saw the data, and it was a fascinating month. It really was. As you say, used car stock volumes increased year on year in June, with stock levels up and average time to sell remaining steady across all sectors. So rising competition for consumer interest saw average asking prices dropped to their lowest point so far this year. But starting with those dealer inventories, they averaged 50 units, and that was unchanged from May, but actually up 6% year on year. Now, franchise dealers and car supermarkets really led this increase. They were both up 11% year on year to 57 and 152 units respectively, while independents held steady at 39 units. And used cars took an average of 31 days to sell, and that's just 1 day longer than the previous month. So we're seeing a lot of stability here, which is also reflected in average prices, because the average listed price of a used car on the Motors platform in June was £17,167, and that was a dip of just £6 month on month and 0.4% year on year. So a lot of stability there in the used car sector.
Yeah, and partway through the story, there's a comment here from Lucy Tugner, who's the marketing director there at Motors, and this heads up the before we talk about this fuel type shift in the market, but saying that with inventory levels higher than they were 12 months ago, dealers still achieved stock turn in line with the seasonal norm, albeit with dealers fighting hard to attract buyers with competitive prices, and added that franchise dealers and car supermarkets played their strengths and cherry-picked the models, fuel types and age profiles they knew would resonate with consumers. Now, this is referring to the fact that alternative fuel vehicles increased their share of dealer inventories to a record of 18%, comprising of 11% hybrids and 7% electric vehicles. Petrol remained the most listed fuel type at 51%, with diesel falling to 32%, which is a sign of the times as the market dynamics and that profile starts to shift as diesel over the years has fallen out of volume in the market, isn't it?
Yeah, definitely. And interesting, just looking at some of the fastest selling cars. So June's fastest selling used car overall was the MG3 with nearly new petrol models, selling in just 7 days, whilst the Ford Mustang Mach-E, definitely a car for you there, Phil.
Really something, yes.
Yeah, with decent aircon. That was the fastest selling EV, selling in just 15 days, while BYD's Seal U topped the hybrid chart at 12 days. And interesting that BYD are now coming into the data that Motors pulls together every month, and really a reflection on some of the used car volumes that BYD are generating from those new car sales.
Yeah, and as always with this report, we do advise that if there's a lot of detail in it, it is available to the dealers that want to look in this detail a little bit more. So if you're not getting involved with EVs or alternative fuel vehicles, or you're thinking of getting involved with some of the new entrants, then obviously this is now starting to show some very valuable insight now into that market, isn't it?
Yeah, definitely. So moving on, next story is from Just Auto, and it's been a while since we had Just Auto on the show, but definitely worth keeping tabs on Just Auto. They do produce some really good news stories, both locally for the UK, but also globally. And the headline there is UK vehicle production down by a third in May as US tariffs hit. Now, this generated a lot of coverage over the course of the week, and really based on the SMMT's latest figures, which shows that vehicle production fell for the fifth consecutive month in May, and it was actually down by a third, just under 33% to 49,810 units. But the SMMT's analysis shows that excluding 2020, when of course we had the COVID lockdowns, this was actually the lowest performance for the month of May since 1949. And year to date, production is down 13% on last year, and that's to its lowest level since 1953. So it's just putting things into perspective here, and that historical, those historical lows.
Yeah, and as you say there, if you look at the details there from the SMMT, they talk about that the total production with cars and LCV being significantly down between, as you say, that May 2025 and May 2024 there, export down 30%, and domestic down 40% there. But you look at the cars versus commercial vehicles, and it's really commercial vehicles has been hit quite hard there in terms of that production as well. I mean, May, in terms of that production, overall production, down to just over 2,000 units from 4,500 units in 2024, 53.6% down, taking it down 37.4% year to date in commercial vehicle production. So some significant shifts there.
Yeah, and it's good that you highlight that this does reflect car and van production. Certainly on the car side, a lot of that was hit by the US tariffs. So that really did hit the number of vehicles that would have been made for export, and that's why we're seeing these low figures there. So hopefully we will start to see a recovery now that the tariffs have been agreed at a lower level, albeit still 10%.
Exactly. So heading over to Autocar, and again, this is this story attracted a lot of coverage this week, for obvious reasons, in terms of talking about that production and UK manufacturing in general. But in Autocar, Lotus denies plans to close Hethel plants as government talks to begin. So this is the Autocar understands that plans are being muted that could end production at the brand's UK factory. But I think, Lotus, she's owned by Geely, which we'll talk about a little bit later in today's headlines, but they deny that they are exiting the UK.
Yeah, as you say, owned by Geely, who acquired Lotus in 2017, because it was owned by a Malaysian group prior to that, who also owned Proton. And Geely have made massive investments in Lotus. But this story is very much based on Autocar's own source, because last week a source told Autocar that an order to stop has come from Lotus's Geely management in China, with a move across the US, a result of growing tariff uncertainty. So Lotus has denied that it's planning to end production at its Hethel base, but there is talk of this move of some car production to the US. And I think it was this particular story was speculating that maybe some of the Lotus production in the US would be at a Polestar plant, which is underutilized at the moment. So that would actually make more sense to generate some domestic production in the US to get so that vehicles won't be subjected to tariffs.
Yeah, and I mean, you never say never with these things. I mean, we talk obviously all the threats around Nissan over the years, weren't there, as we've covered on the podcast. But obviously, this is key from the UK government that we keep these kind of operations, this kind of manufacturing in the UK. So, you can see where the government are heavily involved in these conversations to keep Lotus in the UK as a manufacturer going forward. But we'll talk a little bit more about that later on in today's headlines. But heading over to Car Dealer, and this is the financials for Arnold Clark, and this is that Arnold Clark saw revenue soar to 5.2 billion in 2024, yes, billion. But bosses warn 2025 tax increases will cost 30 million. So that Arnold Clark saw revenues jump from 3.8% to, as I said before, 5.2 billion last year. That the company performed a U-turn in pre-tax profit, up 4.2% to 121 million, and that the outgoing CEO, Eddie Hawthorne, warns business will be hit by 30 million in costs in 2025 there. So kind of reiterating the challenges that Robert referred into in his interview with us, that these costs are hitting the businesses quite significantly now.
Yeah, major impacts for this year, and within the story, it does go into quite a lot of detail about the full year, which ended in December 2024. So do urge you to head over to car dealer to check out the story. But worth highlighting new car sales, because they were actually up by just over 21% to 64,000 units. And according to the coverage, that was bolstered by a large increase in sales of new EVs. So, that's a positive trend there for Arnold Clark, with Arnold Clark generating £1.2 billion of revenue from the sale of new cars, while used car sales jumped by 2% to 191,000, adding £3.4 billion to the pot. So we're talking huge figures here, and that's before you start factoring in after sales. So a good solid year there for Arnold Clark.
Yeah, and you can see why. I mean, those numbers kind of represent the size and scale and volume going through the Arnold Clark operation, as you can see there. And there is a comment on here which focuses directly on the cost from Eddie Hawthorne, saying that the increase in employer national insurance rates, the lowering of the NIC threshold, and significant increases in national minimum wage rates, which come into effect on April of this year, are expected to increase annual wage-related costs by 30 million. So it's really calling out, the challenges that these operations of this size especially face with some of these tax increases going into the market there. But we'll be back after this short break with more of this week's headlines.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are on your podcast feed.
So the next headline is from Motoring Research, and it's Shell survey finds growing resistance to EV switch. So this is a major piece of research that was carried out by Shell of over 15,000 drivers, not just in the UK, but across Europe, the US and China. And it's all part of their 2025 Shell Recharge Driver Survey. And looking specifically at EV ownership, the survey found 61% of EV drivers are less worried now about running out of battery charge than they were a year ago. Almost 3/4 say the availability of public charging points has improved during the same time period as well. But the survey really found that interest from drivers of petrol and diesel cars switching to an EV is falling, and then it starts to split out into the different regions, which adds a fascinating element to this survey, because in Europe only 41% of ICE internal combustion engine car drivers were interested in owning an EV in 2025, compared to 48% the previous year. So that's down from 48% to 41%, whilst in the US there was a smaller decline, down from 34% to 31%. But those figures are still very, very low.
They are, yeah, but I mean, as you say, gives us a bit of an insight into what's happening across Europe and the wider market here. But there has been a lot of conversations around some of the challenges across Europe with that switch to EVs, and saying that European drivers were less satisfied with their charging experiences, with just half, 51%, saying that the reliability of public charges has improved in the last 12 months. And by contrast of that, 3/4, 74% of Chinese respondents and 80% of those in America said public charging were now better. So, kind of showing where the contrast now between different markets and where they are in this transition to electrification is really starting to play out there.
Yeah, and no big surprise there that the main barrier to entry consideration is costs, which is something we talk a lot about
Yes.
on the pod. So it's those upfront costs and lack of incentives. So this is a sort of recurring theme whenever we talk about EV transition.
And sticking with Chinese manufacturers a little bit and EVs, Geely Auto to enter UK market in Q4 of this year. So the first model to be sold in the UK will be the EX5, an electric C-segment SUV, and this is to compete directly with the Tesla Model Y. Now, obviously, Geely we talk about quite a lot. They've sold 2.1 million cars in 2024 without any sales in the EU, UK, or the US. And last year, the firm increased its export by 57% to 381,500 cars there. Now Geely, obviously, we as I say, we do talk about quite a lot because they do own Polestar, Volvo, Lotus from our earlier story this morning, LEVC, which is the London taxi business, and Zeekr that are also coming to the UK market. So they're now coming on their own in their own name.
Yeah, and this is really following hot on the heels of Chery launching both a Moda and JQ last year. And in terms of new brands coming to the UK, we've already reported earlier this year on Stellantis. And just a couple of pods ago, we were talking about the announcement of NIO launching here in October. I think we've also got Lucid Motors coming this year or maybe next from America. But we've now got two new brands. This is the first one. So Geely Auto, they're actually looking specifically at the UK. So because the UK is set to be the brand's first distributor in Europe, with Geely planning to integrate existing local dealers into the sales process. Now, whether or not that means partners that already represent a Moda and JQ, maybe they're getting advance opportunities there to sign up to Geely, but it's looking very crowded out there, isn't it? And just tying in with that Lotus story, this coverage here from this coverage here from Motor Trade News that does actually make the point that they've got Lotus engineering, and certainly the cars that will be put on sale in the UK will be tweaked for UK tastes through Lotus engineering. So I think we can expect to see, engineered by Lotus or some sort of marketing that associates Lotus with Geely for this particular launch.
Yeah, and we know that the SMMT figures have come out on Friday of this week, and we'll do a bit of more of a deep dive next week on the year to date and what's happening with these new manufacturers in terms of market shares and things like that, because first half of the year you've got your BYDs, your Modas, your JQs, and a few others in there. But actually, now in the second half of the year, we're going to be talking a little bit more about Geely, talking a bit about Changan and other operators. But the final two stories we've got now is sticking with those new entrants, and particularly those Chinese manufacturers, and story in Reuters here that China's Changan plans European factory executives say, and this is a story by Nick Carey here over there in Reuters, saying that there's a comment here from Nick Thomas, who's Changan's European head of marketing, sales and service. This is during the test drive of automakers' electric Deepal SO7 SUV at an event just outside London, saying they are working on local marketing solutions, and that they're committed to being in Europe, making Europe for Europe. So that's quite an intentional statement there.
It is, yeah, and the story confirms that Changan will enter 10 markets across Europe this year with its EV models. And Nick Thomas, who also runs Changan's UK operations, and Nick might be familiar to some listeners from his days with Ford and Nissan. He said that the brand expects to start selling the Deepal S07 in the UK this year, with deliveries starting as soon as September. So quite a tight timeline there, and some ambitious plans.
Yeah, exactly. And, we've talked about Changan before on the podcast because they have been in the UK in an R&D facility for the last 12 or 13 years. So not necessarily new to the UK, but obviously as a brand will be new to many of the listeners and certainly new to the consumers. But I know that they are out in the market currently working with the dealer network ready for September, when they expect to be live with their products. So keep your eyes peeled on this one. And the final story we're going over to today is over in the Express there, that China's rival to Tesla's plans UK takeover with giant ship full of £24,000 supercars. Now, this is from BYD, isn't it? And, is it 4 or 5 container ships they've now got?
This is the fifth one, yeah. So, and they own their own container ships, and I think they build them as well, because they pretty much build everything that goes into a BYD car, apart from the glass and the tires. And this is all about sort of integrated logistics and production, isn't it?
It is, yeah, and I say it's a bit of a bitty story here in Express, because I think they've taken it from Daily Mail as well. There's some little
Yeah,
links in here,
yeah.
so
They've cherry picked.
it's a bit all over the place, isn't it?
Yeah, it's worth looking at the story just to see the photographs of the ship, because it's a 16-story container ship with a capacity for 9,200 vehicles. And I think it says in the story that it's something like 38 meters wide. So it's absolutely huge. Yeah, 38 meters wide and 220 meters long. And that kind of gives you a feel for the scale. But one of the photographs shows the ship with the cars on the port, queued up, waiting to embark on the ship. And there's hundreds upon hundreds of cars in this photograph.
There isn't there? Yeah, you do wonder, is it? Well, it's got to be a real picture, hasn't it? I mean, you
Yeah.
would question whether it's AI generated, wouldn't you? Because they're all in this yellow and perfectly lined up. But
Yes. Yeah.
yeah, I mean, phenomenal, as you say, just giving you a perspective of the size, the scale. But actually, when you talk about BYD, and as I say, there we'll talk about their year-to-date performance up until the end of June on next week's podcast. But they are talking about how they are going to take the UK and Europe, really going very heavily on that market, with some significant growth plans for their brands across the markets.
Yeah, and very much the benchmark for the new entrants to chase, because BYD have they've really done a sort of textbook launch in the UK and Europe, and certainly the people I talk to outside of automotive, it's the brand that everyone's aware of. So I'm sure the other new entrants are looking to see exactly how BYD have come to where they are at the moment.
So that's it for this week. Say lots of headlines there. Oh, we covered the main ones. As I said earlier, we've kept the new car results for June, and obviously the half year point. So it's quite a significant sort of data point for us to cover. So we'll hold that back to next week and go into a little bit more detail for the car and the commercial vehicle year-to-date performance, because I think we want to dig into the manufacturer performance a little bit, don't we, Curtis, on that in a little bit more detail. But lots of stories there, lots going on, particularly around those Chinese brands and UK manufacturing production in the main.
Yeah, well, we hope you've enjoyed this week's show. As we promised at the beginning, it was full of headlines. So, but that is all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.